what I want to do is take an example of South African and global equities now. So, and maybe if you can use that to give us a sense of how you positioned in those two asset classes, and also, how you thinking about them on a relative valuation perspective.
So that's a very relevant question right now, because South African equities are perhaps starting to look quite attractive. So it's a complex one, just given the structure of the South African market, given that such a large proportion of companies listed in South Africa earn dollar earnings, which is most of their profits come from offshore. In the past, we've been neutral on South African equities, and we were even underweight for a short period, especially post the pandemic, whereas we've been overweight global equities throughout, and we've even increased that conviction further and gone to a maximum overweight level. And so from a valuation perspective, we're neutral. The macro, we are becoming constructive on, because we've come out of a very negative macro period, and we are now entering a period wherein growth might in fact actually continue, might actually surprise to the upside. And then also we're seeing a little bit of a reversal in terms of price action. And so, whereas in the global context, valuations are perhaps elevated, particularly given what the US market is looking like at the moment. And so, including in the context of the global market, which we currently view as expensive, driven by the US, economic growth is actually quite strong. And price action is also quite supportive. And so what we think overall is that in the global context, managers are still able to find very good opportunities despite the level of the market globally, whereas locally our market is quite constrained. It's quite narrow. It's driven by very few, by a small number of forces, whether it be in resources or domestic SA Inc. stocks. And so although there is some more value to be seen locally, we do think that the opportunity set is far broader offshore. And so that's why we've tended to continue favoring global equity over local, just given the size of that opportunity set that managers can actually participate in.